Today's policy series is titled The Central Bank Digital Currency and the Future of Banking. And there's a big debate about the impact a digital euro may have on the financial system. In the central bank community, the consequences of a digital currency on banks' funding and the commercial bank's supply of credit to the real economy are discussed extensively. Jens Meitmann, president of Bundesbank, recently said in a speech at the BIS that due to the CBDC, the traditional role of banks in the financial system could be transformed. From the private sector, however, there are also positive voices about the digital euro project. In our 6th policy series on the European Commission's digital finance package, Mr. Diederich, CEO of HUB, for example, expressed support for the digital euro project.
This is to complement and not substitute the currently existing forms of central bank money, like cash. So banknotes will be issued, of course, without time limitation in the future, regardless of the introduction of a digital euro. Then the report emphasizes very much synergies with the private sector, and this is key for today's topic. And then the report says quite bluntly, the digital euro was not necessary so far, but there are scenarios under which it could become necessary. And those scenarios are linked to the benefits of a digital euro. And the report highlights 3 points. The general digitalization of the economy, of course, calls for central bank money being also available in digital form to everyone. And closely related to this, the declining use of cash as a means of payment. So here the euro area is heterogeneous. Some countries are more advanced than others in this trend. No country is as far as Sweden has gone in this, but the trend is clear. And if you extrapolate the trend, in any case, you end in a world where the use of cash for payments is far less than what we still observe today. And then the third point is sovereignty concerns relating to foreign private digital means of payment, possible future foreign CBDC. So how do we continue from here? So as announced already in October, the Euro system will decide in mid-2021 on the launch of a project, investigation phase as it is called. And this raises then the question, yeah, but what is then the point of a digital euro? And here I would say the point is still that payment is an essential activity for every citizen. It's part of life, and it is an industry with network externalities, which is easily dominated. And in addition, it is increasingly dominated also by foreign players, by few foreign players. And in such a market, you want to maintain the option to pay with the public means of payment for competition reasons and for reasons that the citizen, may have also needs which are not necessarily fulfilled by the private solutions offered by firms which are, profit maximizing, which is fine per se. I mean, that's a system that works very well. On monetary policy, I mean, we would not see, and the report does not see digital euro as a new monetary policy instrument.
We are using a digital approach because as private bankers, we are seeking for the most liquid markets, and we are managing securities. We are not managing CBDCs. CBDC is a fuel for us to operate capital markets for our clients. And there is a lot of attractivity on the blockchains because it is a layer where we can reconciliate the cash and the security and extract from there efficiencies which are still segmented today between the CSD network who owns the securities and the target 2 networks who owns the cash. And in that matter, all the reconciliation between those 2 networks, we are at the heart of those reconciliation due to the trade we are operating for our clients. Eh bien, moving to a blockchain solution which will integrate the both assets on the same technological layer would help us increase into efficiency and develop all the platform and all the new digitalized offer that Ulrich was speaking of in the previous presentation. So we are using public blockchains, and public blockchains are very interesting from our standpoint because from a capital market perspective, it is a worldwide ledger which allows us to operate with the maximum liquidity by desegmenting the traditional market infrastructure. So from a private banker standpoint, the distribution is made easy and faster through a public blockchain, which is very simple. It's an internet access.
Well, what will be the applicable rules for transferring this digital euro? Will it be, if it is a token, will it be then the rules that we already have under national law for transferring corporeal things? Will they apply also to the digital euro? It's a token? Or do we need a special EU regulation or some other text who does this? And if we have such a special EU regulation, what will it provide for? How will it deal with these issues that are so far mainly regulated on a national level, like good faith, like property? What will be the insolvency protection? If we had an account-based digital euro where I have directly an account with the ECB, or it's somehow linked with an account in the ECB, do I even need deposit insurance anymore? Or is it because I have central bank money? Well, it's money, it's my money, and I don't need deposit insurance. And if that would be the case, then of course many people would try to get this account-based digital euro instead of having a mere euro in an account with a commercial bank.
How do you see, Ulrich and also David, the impact of the introduction of the digital euro to the banking system? And
the financial stability issue of banks, I mean, that's a topic that was spotted early. And for me, the most elegant solution is a tiered interest rate approach, where the citizen expects to be able to hold digital euro to some extent under current circumstances of interest rates under 0%. Now, so banknotes are not remunerated, which normally creates a disincentive to hold large amounts. But at the moment, if you invest into a AAA rated security with short maturity, then you have to pay 60-70 basis points. So with the current interest rate environment, there would be big inflows into digital euro coming from other forms of investment, which is a problem for financial stability and for monetary policy, because it would basically be the end of negative interest rate policy that some, of course, wish to come quickly, but the ECB says it's not yet the moment. So therefore, we need a system to limit inflows. And for me, the most efficient and elegant one is with tiered interest rates, where citizens can hold under current interest rate levels for 0% up to a certain amount, be it 3,000, 5,000 euro, whatever. And others, citizens who want to hold more, and corporates will face a remuneration that is slightly less attractive than what you get now if you invest into a AAA rated government bond.
For a private banker standpoint, there are two approaches. The first one is, of course, the retail money. Ulrich spoke of it very clearly. It is a matter of funding and of stability for the banks, because a lot of our balance sheet and of the liquidity of the private banks is sitting on the deposit of the client. So it is a matter, it is taken by the ECB into the context of the discussion of the retail euro. Here, for myself as Société Générale Forge, we are more focusing on capital market. I think that wholesale money is less a controversial topic. I think it is a matter of, let's say, more technical discussion.
Matthias, maybe also with the aspect of which areas of CBDC are you not properly regulated and should be reinforced.
Actually, the legal nature. I mean, there are so many questions surrounding this. What is this really? But other things that I have not touched upon, but they are crucial of course, is the privacy issue. If this is really existing in an account with the ECB, how do we make sure that, maybe contrary to some other countries, information is not passed onwards to public authorities? How am I protected? Then the question of interest bearing or not remuneration, that I think is a key issue. The scope of distribution. So it was said that, well, private banks should play a role, but which private banks and how, and what should be the incentives that the banks get to work in this? So, and the convertibility, and the further issue that was also raised in the Q&A, I think that's crucial, is will it be programmable?